Hello guys, today is the 31st of August, final day of the month. Welcome to the market review, and yeah, let's cut to the chase. So, for me personally, the most important fundamental theme of these weeks is Federal Reserve, because this tariff situation with China primarily and with India too, actually, uh, getting postponed slash complicated, while European Union seems to be okay. So the market is focusing on the most important central bank in the world at the moment, and here we have conflict. We have discrepancies with what Donald Trump expects of Jerome Powell to do and what he actually does. Um, and if we take into consideration market reaction on Friday, I think Jerome Powell's uh, hints on lower rates sooner, uh, the market just doesn't believe that it will solve the situation at all. So another factor to consider was that GDP growth rate is better than expected. So that actually does not make a huge case for it doesn't improve the odds of lower rates sooner, actually. And if we take a look on the fundamentals during the next week, we'll see quite important day will be Tuesday and also Thursday, because right now ISM manufacturing PMI is expected to be reported below 50, which is actually a recessionary reading, and ISM is still above 50. And you can assume their influence on the economy as equal. So it's mixed now, and these readings will shed some additional light on what's actually happening while the struggle for control over Federal Reserve continues. Okay, and why I mentioned that the market is not so sure about current Federal Reserve situation is because of what was happening in futures, in indexes. Actually, Friday was quite a messy day, and this is Nasdaq. This is daily testing lower boundary of this trend. Yeah, it's quite well protected technically, so to speak, because not only we have this downtrend line here, but also we have 50-day moving average. So this area is very important, and if we will see a decisive break to the downside, that could mean that more serious correction is about to start, and we are actually not so far from it. Not at all. It could take 1-2 days to proceed with correcting below the 50-day moving average. So yeah, the only contradiction to this more bearish case is Russell, which is still strong, and unfortunately or fortunately, there are no obvious explanations to this phenomenon. It could, from if we are to assume a positive standpoint, that could mean that the rally is actually broadening and small caps are leading now, and it's the true sign of the real bull market. Actually, that bull market was quite rare during the previous years because small caps continuously lagged behind mega caps, and it's not the easiest environment to make money in, and also probably not the best signal for the economy overall, which becomes too large, becomes a bit too much of an oligarchy and a bit less of small business driven. And big role of small business has always been America's strength when it comes to economy. So we'll see. And the negative approach to this bounce in price could be put into words like this. It's a technical bounce, which is just created by rotation of capital at the end of the actual rally. And as of now, I am leaning to this case a bit more. Obviously, this rally is really, really long. Took basically growing since April, and only now we see these curling to the downside. So yeah, another data point which proves this slightly quote unquote bearish case for me is lack of participation in the individual names. These two ones, FUTU and ZK, are Chinese. They were supposed to be a bit stronger, but you can see that we will take a look at some popular names, because I only in the world of stocks I prefer to focus only on growth, because it's the best area to actually make money, but the season for aggressively where you could start buying growth aggressively is not here at all. The best thing, the best moment to trade them is when the market is recovering from a correction, which was in April, and since that it's just not the case. So here we see bull, Webull, very weak close on Friday, big volume. Pony AI failed breakout, sales pressure. ARM holdings also below the 50-day, curling to the downside. On Friday, sold off on big volume. Herman holdings, same picture, sold quite a bit of it, but the volume was on the lighter side. What else? Tesla was not widely, but was expected to break out because of the good technical picture on the weekly by some people I respect. But again, another attempt was largely muted, and it looks quite vulnerable because, like some of the aforementioned names, Friday sales were quite extended, and the volume was good too. So, and as you can see, this pressure is quite visible. These are the new results, the ones I added only recently, but the fact that there are names which attempt to increase in price, such as AFRM or FTAI, and even Celsius Holdings is back in black, it seems. You can find resilient names in any market. The problem is that in weak markets, the balance between the buyers and the sellers is not very well defined. And each breakout attempt, which basically means that there are really more buyers than sellers, could be met by some institutional scaling out or whatever. Large players liquidate their positions in euphoric markets, which is not the case right now. I wouldn't call it an euphoric market, and it is certainly not a blow off top from a technical standpoint. But breakouts do not work too well during this period. So that's why I'm pretty cautious. Ideally, we would see a correction in September, which is historically one of the worst months, and additional seasonal pressure is to be expected. Ideally, we correct in September, and but then we have a proper Santa rally in the second half of October, November, and December, and that is still totally possible if the Chinese situation will be resolved. I mean, the tariff situation with China, which is quite important still in this market. As of now, my personal stance is wait and see, and what I mostly do is short-term trading in the world of decentralized finance. By the way, here you can see that Bitcoin at the moment is in a clear downtrend channel, and it could maybe it's going to visit its 20-day moving average, 200-day moving average, I'm sorry, which is roughly 6 to 7% lower and is around 100,000. So we'll see. This chart looks quite bearish, and same situation as with Nasdaq actually. Powell signaled rate cuts earlier, and BTC buyers should be excited, but that still doesn't happen. Maybe because the real economic conditions for a rate cut are not there, or maybe the market doesn't like, and most certainly doesn't like, a possible change in status quo where Federal Reserve is independent from the political administration. And also, you should take into account that this market, I mean, BTC is quite crowded these days, and there are lots of people and organizations, most importantly in this asset, and not all of them are most likely motivated to keep prices too high, you know. And also, you could take and you should take into account this IBIT chart. In my opinion, this is an example of the tail which could actually be wiggling the dog, and you see that the Friday was very weak close in this market. And we also have MSTR, which some people say will be responsible for the next financial crisis, but this is really important for the world of Bitcoin. Yes, because such organizations, if they go down, they shake the market quite a bit. So once again, the price usually starts reflect change in trend and reveal that something is about to happen long before, or at least before the actual news materialize. And it's really it's always it's like magic. Each news piece comes at exactly the right time when the price is moving. But what usually gets forgotten is that the price was usually already moving in the direction of the trade. And sometimes there are no news at all, like on Black Monday, or what was the like market crash of 1987? No news, just crash. But the market was correcting few weeks or even months before that. If it was correcting, that's for sure. But what was it, weeks or months? I don't remember at the moment. So yeah, BTC looks quite vulnerable. And if we look at what's happening in ETH, we see that there was a breakout in July, and it is basically leading after that, and it still looks healthy actually at this moment. Another flag here after this advance of August and a bit of July, so still looks really strong. And let's also take into consideration this total capitalization of decentralized finance. So it was looking quite bullish too, but this sell-off changed the situation quite a bit. And also we see that lots of total capitalization of decentralized financial protocols is not growing during the last 2 weeks, and it is actually sinking. So it's basically the market of ETH now, of Ethereum. So that should tell you something. And it's maybe it's one of the first situations in my memory when you can actually be simultaneously short BTC and long ETH. So that could be quote unquote the trade for the coming week. We'll see. Yeah, so we'll see. No major releases next week. Very moderate expectations of the market, and let's actually hope. I know the market is not the place for to be hopeful. It just does what it does, but a nice correction here would be really good and could bring us some decent Santa Claus rally. And yeah, I guess that's it for now. Let's be in touch. Bye bye.